Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So in this video, this is going to be like a back testing session or basically a trade review. So if you've been following us, you know I've been making available in the YouTube channel weekly forecasts. So basically we're going to look at the delivery of price based on the forecast I shared 2 weeks ago using the chart markup in the free Telegram community, and also how the forecast also for last week also projected anticipation in continuation in the direction established 2 weeks ago, and also projected the possibility of an opposite expectation if the anticipated expectation doesn't work. So guys, in this video we're going to look at that in-depth review, and we're also going to look at the entry models based on the power of 3, or basically let's say based on trading sessions. So this is the weekly time frame, and we are making use of the EURUSD for this particular back testing or trade review. So if you've been following us, I made reference to the fact that we saw price reacting at this weekly supply zone, and we had this bearish movement back into this weekly bullish fair value gap in which price mitigated that, and we saw bullish continuation to the upside. Within this candle week here, we can also find a bullish fair value gap in the daily time frame, hence why the deeper pullback into this candle week before the bullish continuation to the upside. So last week I pointed to the fact that we have this as a draw on liquidity, this buy side, because I told us to expect to see that the supply zone may not really hold price, because we can see volume is strongly bullish to the upside. So I expected to see price would take out the buy side liquidity, and we have this bearish fair value gap here in the weekly time frame as where we would want to see price trade into when price takes out the buy side liquidity. So today's Friday, we're still having the weekly candle delivery. The weekly candle has not yet been fully established, and we can see that we are having bullish volume to the upside. So basically we can see that price violated the supply zone, because we can see that volume is trading above that. So we are waiting to see how the candle is going to close for this week. And clearly we can see why we expected bullish continuation is because we can see bullish momentum, and in correlation to the dollar index, we've been seeing bearish momentum in the dollar index. So let's get to the daily time frame. So here in the daily time frame, clearly we can see the daily time frame bullish fair value gap, which price returned into, and we had this bullish movement of price to the upside. So what you can clearly see from the daily time frame is this is the last sell candle before the bullish movement, and we can see that price traded above the last down close candle, and we can also clearly see that it traded above this high points, volume closed above that, and we have price return to mitigate the daily bullish order block. So we can see reaction from the daily bullish fair value gap, and the movement of price violated this bearish order block, and now price have returned to the bullish order block, because here we have the last down close candle that sponsored now the bullish movement of price to the upside. Price have mitigated that, and we have bullish continuation here to the upside, and price closed above the swing high point, this external range, this major trend buy side liquidity. We can see volume closed above that. So the delivery we can see within this movement is we had this down close candle before the bullish impulse, price returned to the downside, mitigated that. We had form of a choppy price delivery here, but then we had the bullish momentum to the upside above this high point, broke through this high point with volume closing above that. So clearly what you can see is where is the sponsorship zone that price has the possibility to return into. It is this daily bullish fair value gap, because we can see price here return mitigated this daily bullish order block that mitigated the sponsorship zone we have here that sponsored bullish movements. What we can see here, price mitigated this proportion block, and we have now movement to the upside and impulsive movement here that left this daily bullish fair value gap. So price has taken out the external range liquidity, and this bullish fair value gap is the internal range liquidity. So that was why 2 weeks ago, with the chart I shared in the free Telegram community, I told us to expect to see what? Bullish movements from this daily bullish fair value gap based on the daily time frame. But when we went to the 4-hour time frame, we also had another bullish expectation before the daily bullish fair value gap. Now what we can see is that now price dropped into the daily bullish fair value gap, and you can see clearly this is something I shared in the free Telegram community, and I'm displaying that particular chart here on the screen for you to see that. So we can see how price returned into the daily bullish fair value gap, and you can see how volume here is respecting the daily bullish fair value gap. Volume is failing to close below the daily bullish fair value gap, failing to close below the consequent encroachment, or what we call the main threshold. And now we can see we started seeing the bullish movement of price to the upside, and you can see price heading to the weekly bearish fair value gap, taking out the buy side liquidity we identify from the weekly time frame. So now let's go to the 4-hour time frame so that you can also see this narrative. So from the 4-hour time frame, this is what we can see. So you can see why you need to understand how to do your top-down analysis. It will help you minimize or reduce the noise you would see when you're dropping to lower time frames. So you can see we identify the sponsorship zone from the daily time frame, which is the daily bullish fair value gap. Here in the 4-hour time frame, you're going to face complexity in identifying your point of interest. But we can see that we clearly identify that from the daily time frame. Therefore, we work with that here in the 4-hour time frame, in which we also work with that in the 1-hour time frame, and then also in the 15-minute time frame, where we were basically taking our trade execution based on the trading sessions. So what you can just see that we have here clearly is price return to the daily bullish fair value gap. Basically, if price was going to trade more to the downside, meaning we have trend line liquidity here, which I called our attention to when I shared the trade setup, because we have this unmitigated 4-hour bullish order block, but then we had this from a higher time frame. And from the 4-hour time frame, we saw price reacted at this fair value gap. So let me point that out to you guys. We saw price reacted at this bullish fair value gap here in the 4-hour time frame, and we saw volume closed above that. Volume was basically respecting the bullish fair value gap here in the 4-hour time frame, and that was why now we saw this engulfing candle that was delivered on Friday. This was the candle delivered on Friday, this engulfing, this bullish engulfing, and this was the last candle on Friday. So I told us we could see bullish continuation based on the 4-hour time frame. We could see bullish movement of price to the upside, and if price doesn't trade higher to take out this external range, then we know we should anticipate bearishness into now the higher time frame. The daily is higher than the 4-hour, and then from the daily time frame sponsorship zone, we can begin to look at how we are now going to go bullish. So what we can now see, price traded into the daily bullish fair value gap, and we had this movement. Price gave us the movement of price here to the upside. We can see price created what? A market structure shift, because the volume of this bullish candle closed above this high of this candle, of this bearish colored candle that swept this high and also swept the swing high points. And now price created here a bullish order block. So basically from last 2 weeks, I didn't execute the buy movement. It was within this week that I executed the buy movements, because now we can see here price traded to the upside, taking out this, giving us a market structure shift. And you know, I pointed to us, you can go check the weekly first focus is in the YouTube channel. I told us want to see price return to the bullish order block that is within the daily time frame sponsorship zone. So we can see bullish volume to the upside. Price created sell side liquidity. So I told us to anticipate to see a pullback to the bullish order block, and then we go bullish to the upside, targeting the buy side liquidity here, and in extension we could see price further continue bullish to the upside. So clearly now, how would you have executed these trade setups? So basically we can just now go to the 15-minute time frame based on the trading sessions, and then look forward to trading executions. But then let's look at the 1-hour time frame, because I'm pointing out top-down analysis, and then we're interpreting price based on these time frames. So what we can see from the 1-hour time frame is how price returned to the downside here, and we can see price pullback further went into the daily sponsorship zone, and here we can see the movement of price to the upside that broke through this high. So first we have this internal market structure shift before we have this ideal market structure shift, and what you can see, we have what's failure swing here. Price here failed to continue bearish. Price dipped more lower into this 1 hour institutional order flow. We can see this wick dipped into that, and now we had bullish movement that now gave us this market structure shift. We have this internal market structure shift. You can see here we have a fair value gap. So this is the 4-hour bullish order block. So in the 1 hour time frame now, we can see where that zone is, and we can see we have a fair value gap zone there. So clearly we can see how price returned to that, and then we have what the bullish movement of price to the upside. So on Monday I didn't really execute a trade, so the trade execution began from Tuesday, Wednesday. So what we can see now is price return to our zone. So clearly now, based on the structural delivery, you could have just set your entry here, your long position here within the 4-hour zone. Refining it to the 1 hour, we could just place it at the fair value gap, the main threshold of this bullish fair value gap. Stop loss below this, and you can see how price went to the upside, because here we have price returning to seek what? The sell side liquidity. So let's look at that now from the 15-minute time frame. Here in the 15-minute time frame, we can now clearly see what we have in the 15-minute time frame is this. So we have here price here came to the downside, taking out the Asia session low points, mitigating that 1 hour institutional order flow zone, and then we had this movement of price to the upside, price return, and then bullishness. But then, you know, I told you I didn't execute this. That was 2 weeks ago, so we anticipated that within this week. So what we can now see is looking at the delivery, because this return now was the delivery that happened within Sunday through Monday for this particular trading week. So what we can see is this is the Asia session low points. So we basically have this sell side liquidity, and the Asia session low point is here. So we can see how price dipped on Sunday back to the downside here to mitigate this and began to give us the anticipation. So what we can see is this is the Asia session high point. Price took out the Asia session high, mitigated this unmitigated bearish order block, and then we had price fell back to the downside, taking out the Asia session. So, you know, we're anticipating a bullish delivery. So looking at the bullish narrative, price took out the Asia session high, and then we had bearishness. And I always emphasize this, which is clearly something I emphasize in the mentorship course, that I really do not like most times working with zones that are within the Asia session. And we can see that this bullish order block is within the Asia session, because this is the Asia session high, this is the Asia session low. So we can see how price violated that and went further to the downside back into the 4-hour zone before we had this bullish movements. So because I was not having that clarity, I didn't execute this movement on Monday. So clearly now what we can say, allowed Monday to trade. So Tuesday now was when we looked to trade. So looking at Tuesday, we had this bullish fair value gap, which also is in the 1 hour time frame and also in the 4-hour time frame. So we can see this is that bullish fair value gap. We can also see that in the 4-hour time frame, we can see we have what? This bullish fair value gap. Price violated this rejection block. So anticipation is to see the possibility of it reclaiming price, and in confluence to it, we can see the bullish fair value gap. Hence why I look to execute from this bullish fair value gap without necessarily anticipating to want to see price dip more lower. So let's check that from now the 15-minute time frame. What we can now clearly see is price gave us the movement of price to the downside to seek the sell side liquidity, which is now the Asia session low points. So when price returned to the downside, and I saw price respecting the bullish fair value gap, so let's just identify that from the 15-minute time frame, the bullish fair value gap, and volume here closed above it. Volume here closed above it. So what happened was, now I executed the trade from this down close candle before this bullish movement to anticipate that price will continue bullish to the upside, and my stop loss was below this candle wick. You can see the chart setup shared on the screen was below this candle wick, but unfortunately price returned back to the downside to take that out. So, and then continued bullish to the upside. So for Wednesday, we looked now forward to see how price was going to continue bullish. So what I identified was price, this was the Asia session low points, and this was the Asia session high points. So just the way we can see, we had this Asia session low and the Asia session high point. Price returned to the fair value gap, bullish continuation, volume respecting it. So I anticipated now to see how price will return to the zone, which was marked from the 1 hour time frame, because I was expecting more bullish continuation. I've already established the weekly bias, so I was staying with the weekly bias. So I marked out this block. You can see the chart setup shared on the screen. So I marked out this block, expecting to see price return to seek the Asia session low points. We have a fair value gap. Mitigate this, because this bullish colored candle swept to the low of this bearish colored candle, and we had the bullish impulse. So we have liquidity resting here. Price should seek this, and then we continue bullish to the upside. Seek the Asia session low, and we continue bullish. So we can see how price returns, seek that, and bullishness. So my goal was to see price again take out the Asia session high, and it was 1 to 3.27 risk reward trade setup for this particular movement that I was expecting to see price take out the Asia session high points. So we can see Thursday price just further continues strongly bullish to the upside. So clearly now what you can see now, you have, this is the Asia session low, this is the Asia session high points. We can see in the London session here, price return mitigated this bullish order block, because this bullish order block was still within the Asia session, respecting this bullish fair value gap. So now price returned to respect that during the London session, and we had bullishness to the upside. So we had the London session high. So New York was to continue movement, and what we can see is that we had this bullish order block here. So clearly now we can see London sponsored movement to the upside that broke through the Asia session high points. So now the London session bullish order block is this. So we have liquidity resting here. So now we can see how the New York session returned to the downside and went to the upside, but failed to continue bullish to take this high points. And now we can see the new day delivery further went down back to respect this bullish order block that sponsored bullish movement that broke through this previous day Asia session high points. So we can now see price return to take that sell side liquidity, mitigate the order block, and now we can see the delivery we are having here. This is Friday movement now. So this is not really a very in-depth trade review. I just wanted to give you guys a quick one. So cheers and God bless you all.